What's up, everybody? Nick Campo here. This is Ben Singleton. This is the NBI Financial Group podcast. What is it called, Ben? I'll tell you what it's called, Ben. It's called the Loan Guys. The Loan Guys, because we do mortgages. We give loans.
That's right.
How are you doing today, Ben?
I'm doing great.
You look good.
Thank you. You too.
I appreciate it. Got to look good in
Absolutely.
order to. You have to look good, and I tell people this. You look good to play good. If you look good in the mortgage industry, you will treat your clients well. You will get them into multiple great deals. This is episode 1. Let's tell the people just a little bit about us.
All right.
What's our why? Ben, what's your why? Why did we start NBI Financial Group, the mortgage broker shop?
Well, we really wanted to take it direct. So both me and Nick have a background working for lenders. On the operation side, for me, I was an underwriter for over 10 years. And it was really made me feel great being able to help clients get into their home. However, we really wanted more out of it, to be able to help the clients more. So what are we doing? We now have a broker shop where we now have a broker shop where we work with 10 different lenders and are able to help put our clients into the best situation for
More
them.
than 10. I would say more than 10.
10 right now. We're actually in the process.
We're in the process of signing on a few more, and which is a little bit different, right?
It is.
So most people, they go to a loan guy.
Yep.
Mom, dad might say, oh, yeah, Johnny down the street, he got me a great mortgage.
He probably did an okay job.
Okay, yeah, absolutely. And they go to them, and they could work for a company such as, Movement Mortgage or a Waterstone Mortgage or any of them, right?
Yep.
And those mortgage shops are great, and they're great at what they do, and I would never say a bad word about them because they're doing what I like to say is very noble work.
We both worked for them before.
Both worked for them before.
Absolutely.
Helped a ton of freaking people.
We did.
Helped a ton of people. But the difference between them and us is what? We can shop you
Correct.
amongst a multitude of lenders, and we're adding more who can do more specialty stuff. So we can do everything.
Correct.
You want to know where I find the value as well? Is Realtor.com. I think it was Realtor.com or National Association of Realtors. Don't quote me on the source, but they just published a fact that mortgage brokers like ourselves
Yep.
get the client a better deal. What do you think a client's their first question is? I mean, my first question would be, oh, you're a mortgage broker and you want me to come to you? What do you think their first question should be to us?
What do I need to do to get the home?
That's not going to be their first question.
So
What is the cost of your service? You don't think that's the first question in a lot of people's minds?
that's one of the first questions.
It probably is the first question. They know the home they want. Now they want to know how much it's going to cost to get there. A lot of the ones I talk to anyways. And if they don't say it, they're probably thinking it, right?
Yes.
Who walks up to somebody and, it's like you going to an ice cream shop, ordering an ice cream cone, but not knowing it costs $5. Like, you have to have a different type of wealth not to worry about cost, right?
Yeah.
What's the cost of a mortgage broker? Us anyways.
To the clients?
Yeah, what is our cost to our client?
Nothing.
To the borrower?
Nothing.
The person buying the house, Ben.
The lender pays us.
Who?
The
Who?
lender.
Oh, we're on the lender paid compensation plan.
That's right.
So, So that means that when a client comes to us for our services, we shop a multitude of lenders. Those lenders want what? So that they can stay in operation.
Our business.
They want our business. So that study by either Realtor.com or National Association of Realtors, when they were studying why mortgage brokers keep taking up more and more of the market share, very interesting study, I should mention. Maybe one of the reasons is what they said. On average, we get a lower interest rate, anywhere from, in 3/8 of a point to 3/4 of a point lower on average than if you just walked into, say, a retail shop.
Well, and it makes sense. There's more competition.
More competition.
What does competition do? Drive prices down.
Yes. So when there's a lot of supply, and that supply is all wanting the same thing.
Yep.
And so there's 10 lenders that want one person's business. It's going to force them to go down, and it's going to force them, You have the power when you work with a mortgage broker.
Correct.
As a client of ours, as a buyer of a home, as a borrower on that mortgage, you have the power when you work with a mortgage broker.
And not, yeah, and that does not even go just towards cost and pricing and rates. That also goes towards the different products.
Hey, y'all. Thanks for watching this clip. Go ahead and bang that red subscribe button.
And turn on notifications by ringing that bell so that you can keep up with all of our mortgage and real estate content.
Now back to our regularly scheduled program. Let's talk about one more thing before we hop into the products, right? Because I was getting there. The next thing I want to talk about is closing costs on average are $1,500 to $3,000 less, according to that same article. On either, can't remember if it was National Association of Realtor article on their blog or if it was Realtor.com. But so you got a lower rate on average, a lower cost on average. That lower rate can save you anywhere from $3,000, $4,000, $5,000 over the life of the loan
to tens of thousands.
To tens of thousands. I did a mortgage today for a guy. Went down a little bit on rate for him, got a better rate. Guess what happened?
What?
Over the life of a 30-year loan, guess how much that rate saved him? The lower rate saved him, and it was about 3/4 of a point.
3/4 of a point? $30,000?
40.
Yeah.
$40,000. That's one happy camper.
Yeah. Oh, I'm sure.
So this is what we're telling you. You work with a mortgage broker. You don't pay us. We're a lender paid comp. In rare cases, as full disclosure, in rare cases, if we have to cut our compensation, we have to flip to what you call a borrower paid, and we would lower our compensation to as low as you possibly can. That's in a rare case where we have to do it in order to help you qualify because we're up against ratios or something like that. And in those cases, you would pay us directly. However,
it's 1%.
It could even be less than 1%. But even in that case, that is way less than you're paying anybody else.
Correct.
They get low, on average, $1,500 to $3,000. So you're saving $1,500 to $3,000 up front when working with a mortgage broker, and then on top of that, you're getting the lower interest rate. They don't pay us a majority of the time. I would say 99.5% of the time, it's a lender paid compensation, right?
Right.
Saving $40,000 in some cases over the life of the loan, which this isn't every case. We have to look at each case individually. What else is great about a mortgage broker? And you started to talk about it. We work with how many lenders?
Right now, 10 and going up.
So if I walked into, say, a Movement Mortgage, Waterstone Mortgage, or Quicken Retail, or Rocket Mortgage,
yep.
How many lenders do they work with?
Oh, just themselves.
Just themselves.
Correct.
That doesn't mean they're bad, though.
No, they are great at what they do, but what they can do is limited by their products. And if you fit into their little box, if you are the perfect client for them, you will have a great experience.
100%.
But if you don't, for example, if you're a self-employed client who has a really good CPA, has a lot of write-offs that probably would not be there if it came down to paying your mortgage, right? So you are a very qualified individual who will be making your mortgage payments. But how is it going to be looked at by the majority of lenders? Are going to sit there and look at it and say, well, here's your net income because of all these expenses. That's not how we would treat you. We have lenders that have a specialty bank statement loan.
So we average your deposits into your bank account, and they would only exclude stuff that they can't prove is from business, but from a business transaction.
Correct.
We can look at business or personal, and they would take usually 50%, not all the time. You can go up to 75, 100 in some cases, depending on the lender. But we would take your cash flow. So a person who is qualified for like a $15,000 mortgage, I just did this one. You know this one, owns a massive company here in the Carolinas. Yep. By the way, we're licensed in North and South Carolina. We're going to get more states, but we are currently licensed. We're Carolina boys. Currently licensed from upstate New York, Carolina boy. From where? What do you call Myrtle Beach?
You're more southern than me now.
Oh yeah. Oh, absolutely. I embraced the South. I embraced it. What Dixieland, baby. I'm a Dixieland delight. But what is it that you call Myrtle Beach? You're from Myrtle Beach, and I'm telling the people, when you're talking to your realtor partners,
Oh, the Grand Strand?
the Grand Strand, what in the freak is that? I call it Dirty Myrtle.
No, the Grand Strand. That means like Myrtle Beach, North Myrtle Beach, Socastee, Conway, all that area.
Gotcha. Talking to the mic. So, the Grand Strand, Carolina boy, Myrtle Beach High School. Everett Golson was a high school, not classmate, a couple years younger, but still pretty cool.
Yeah.
I moved here. I went to the great city of Clinton, South Carolina, Presbyterian College, where we both went to school. Got that great,
The Blue Hose.
the Harvard of the South.
That's right.
For all my northern friends who are probably watching this, that's why I went down to PC. Was Presbyterian College. I really wanted to study hard, and I did. Anyways, I didn't, but that's a different story. So anyways, we're getting back into the mortgage thing, right? So we're here in North and South Carolina. We have different programs, and listen, it's not just these specialty programs that we do. We do Fannie Freddie, and we have more leeway on them because we don't necessarily have the same overlays as a Rocket Mortgage or a Waterstone Mortgage or an Atlantic Bay Mortgage or any of those great mortgage companies, and they are great. And I'm not trying to bash them by saying this. I am just telling the facts of what it is. They have their products and only their products. I actually have a friend of mine who's a loan officer there and does an absolute killer job who refers business that they can't do to me.
Yeah.
And I get that business done. But I also have realtor partners who give me all their business because they know I'm going to get that business done. And we do have a built-in distinct advantage, right? We have our underwriting background, so we pre-underwrite every file. We get loans closed in like 15 days.
Yeah.
But that's not our why. How about the loan I say, oh, yeah, the bank statement deal. Ended up getting a $1.5 million purchase bank statement deal. Nobody else could do it. And we had to go bank statement because we could go down to a 640 credit score at one lender, only one lender. But we got it done.
Absolutely.
$1.5 million purchase, $1.1 million loan amount for a guy who absolutely crushes it. And the reason his credit score is low, this is wild. He paid off a car all but $12, right? Thought the whole thing was paid, and it was reported negatively forever. Crazy.
$12.
Over $12, literally only negative credit. But we got that deal done. And he's purchasing a home for his family. This guy has so much money that he's been purchasing homes for his family in cash. I'm talking $475,000 in cash for people. Would much rather have kept that money in the bank account, use it towards other investments, but he couldn't. Like, I'm telling you, like, he has multiple deposits into his bank account, like $175,000 multiple times a month. Wild. Awesomely successful business person. He couldn't get a loan at a credit union, at a bank. He tried to go to retail mortgage lenders, mortgage bankers. Nobody could do it. He came to me. I had him qualified in 3 days.
Flexibility is huge.
And you're a solid borrower still.
Absolutely.
This isn't 2008 bullshit. That's FHA. FHA is the new subprime. My mortgage people will get that.
But yeah.
My mortgage people will understand that. Hey, y'all. Thanks for watching this clip. Go ahead and bang that red subscribe button.
And turn on notifications by ringing that bell so that you can keep up with all of our mortgage and real estate content.
Now back to our regularly scheduled program. But, you know, and I'm partially kidding with that because FHA is a great product. I actually purchased my first couple of homes with FHA mortgages. So here's the deal, man, is at the end of the day, down payment assistance programs, we have them. We have a multitude of things that a lot of retail people, a lot of banks, a lot of credit unions can't do. That's the benefit of a mortgage broker. You know what the other benefit is?
What?
What does everybody want to do when they find their home? You don't know, do you?
I don't know where you're going with this.
Get in it as fast as possible.
Well, yeah.
Realtor.com just published a study. Isn't it weird how I read all these mortgage real estate things? Realtor.com just published a study. You know what that study said?
What?
The average retail lender during slow season closes a loan in 42 days. The average mortgage broker during slow season closes a loan in 15 days. During busy season, like right now in the month of June, the average Retail lender closes a loan in, guess how many days? 60. Guess what the mortgage broker is?
Still 15.
18. 3-day dip, but that's not our fault. The lenders aren't staffed right. It's never the broker's fault, right? So here's the deal. So what I have just told you, and I have told our watchers / listeners, what is it? What did we tell them? Do you know? We told them that we don't cost them 99.9% of the time.
We have the products.
We have the products that they need to make sure they're always getting qualified. We have the underwriting background. Us personally, we have the background, so we can get deals done even faster than what the averages are. We're quicker to close. We cost less money, and some people we've even saved up to 40 grand. Not everybody. It depends on your situation, but some people we have even saved you up to what? 40 grand in a transaction. So let me tell you something, Ben. You know what my why is? Because that's what this whole episode is. Why did I become a mortgage broker? Why didn't we open up a retail shop? Why didn't we open up a retail branch? We would have had all this. We would have had this money behind us that they would have given us.
Yeah.
We would have marketing dollars. Why didn't we do it?
Why?
I don't know. Why didn't you do it? You tell me first. Why this? Why mortgage broker?
Because I want to make a difference to our clients. Plain and simple. I mean, we have the benefit of working with our clients directly, not only for this transaction, but for the rest of their lives, to set up a plan for them for the rest of their lives.
Yeah, you're talking about our comprehensive real estate plan we came up with?
Absolutely.
That's absolutely awesome. But that didn't even develop until we were already in business. Isn't that the wild part? Like when we went back, I want you to go back and think about the beginning of the business, like the very beginning. And that's a part of the why now. That's a huge part of the why.
Yeah.
The comprehensive real estate plan, I'm more passionate about that than I am about some of the other stuff that I wanted to do.
See, but I think that really is like a lot of my why, but actually put into form.
Gotcha.
Because that is why we have all this knowledge. We've worked for lenders for years. We know how it works. We've worked on the operation side. We want to be able to bring that knowledge and that expertise directly to the client and help them. And not only, just like I said, not only for this transaction, but in general.
Yeah.
Let's go over the cash flow,
yeah,
the amortization, meaning where exactly is your money going in your payment. So you can make
how long it's going to take for you to pay it off.
Exactly.
Yeah.
So you can make the best decisions for you. One other thing. What about rental properties? We will walk you through that and through the benefits of owning rental properties and how that can help your cash flow.
We just talked to a friend of ours about the comprehensive real estate plan.
Yes.
Somebody who knows us well knows that we have big hearts.
Yep.
And this is a major part of my why as well. And I'm glad you touched on this first because there's other reasons for me as well.
Yeah.
There's reasons for this podcast. There's reasons why I do what I do on social media. There's reasons for all of it, right?
Absolutely.
But this, do you remember how this plan came about?
Yeah.
I told you about it the next day.
Correct. I remember the conversation about the next day and
in
you
the
telling
office,
me
yeah.
about,
In our beautiful office.
Yes.
With wood paneling that one of our friends said looks terrible. He said actually it looks like a 70s porn scene. Yeah. But listen, it's our office, and I love it. And what he calls a 70s porn scene, I call cheek. Right? But long story short, the reason that here's how the comprehensive real estate plan came about. I have a wife and a kid. I moved into a new house. I'm in my forever home. I'm lucky. 33 years old. I'm like, damn, man, 33 years old. And I felt behind in life. Is that weird? I felt behind in life. And if people saw, and I'm not trying to brag, but if people saw my house, they'd realize I'm not behind in life. But I just don't feel like I had made it yet. And I still don't feel like I've made it. You know, you have a different feeling when you make it. You don't know, but you've made it your whole life. You were born with a silver spoon on third base, as some would say. And that's not a shot at Ben. He's still a great guy. But for us hard-working folk of America, us blue-collar, now white, that's why I had to rock the sweet suit, which right. You got a sweet suit too. And tie. I like that tie. Power tie. Right. Mine's more powerful. But anyway, this is just us joking around, folks. You'll get used to our personality. But long story short, I was sitting on the couch and I was actually looking up, how do I become a top 5 originator in the entire United States? In the entire United States. And I was watching YouTube videos and stuff, and somebody hit me with something. And then I started doing a little research, and I'm like, okay, so here's how it went. I'm watching, I can't remember his name, but he's a top producer. Like, he knows all the big guys. He knows the David Lunas. He knows the Barry Habibs. And if you're in the mortgage industry, like, this guy's friends with them. Those guys would have no clue who we are. We're a lot younger, but we're coming, right? And we're coming fast. Well, at least I am. And Ben's got my back, too. But these are titans of our industry, wouldn't you say?
Yes.
Like, they're up there for, like, knowing what they're doing. Like, Barry Habib is MBS Highway.
Yes.
I think, yeah, MBS Highway, right?
Yeah.
And then there's just different people who are doing different things. Now, are they Dan Gilbert's big? Are they I don't think they're Dan Gilbert big. Are they what's the Matt Ishbia big? No, I don't think they're Matt Ishbia big. But these guys have made it. These guys are doing really well for themselves. I respect the shit out of them for what they did. Also, who's the T-Lot podcast? The Loan Officer podcast. What's his name again? Owens, Dustin Owens.
Yeah.
Yeah, he's another one. He's in there. He's in Future Leaders and this, that, and the other thing. He's another guy that I have a lot of respect for. I don't agree all the time with what he says about mortgage brokers, which, listen, I listen to your podcast, T-Lot Podcast. I'm going to shout it out. It's a great podcast. If you want to be a top producing loan officer, watch it. What he says about mortgage brokers, some of what he says are correct depending on who it is, and some of what he says is wrong, but he's never done it before, so I'm not going to hold that against him.
Yeah.
Right? I know mortgage brokers who crush it.
Oh, absolutely.
But these guys, where was I going with this? These guys are titans of the industry. Where was I going with this? My why.
Yeah, on the comprehensive real estate plan.
Oh, comprehensive real estate plan. Yes, I was listening to some of the titans of the industry because I want to emulate what they did. I'm young still. I'm in my 30s. I'm like 30, what, 33? 33. I don't even count my age anymore. I really don't. I don't count my age. It doesn't matter to me. I count it to see where I'm at as a check mark. But anyways, I was like, man, I'm in this beautiful house. I got a beautiful wife. I got a beautiful kid. I got a family. Like, it's awesome, man. Like, and you're my neighbor. We live in the same community. Yep. We're members at the same golf course, which we don't really golf that much anymore, but we were. And then we started a business that we're passionate about.
Absolutely.
And I don't miss golf.
Yeah.
It's like, you know what I'm saying? Like, I just don't miss it. And so my why was I'm an extremely competitive person. I want to know how to be the best every single day. I compete against myself. I yell at myself, dude. I told you the story about this morning on my walk. I can't tell it on this podcast because it's graphic. But, like, listen, just put it this way. I had an injury, and I was yelling at myself like David Goggins was yelling here. Like, it was wild, right? But I finished my walk. And I'm not talking like a walk around the block. I'm talking about the 5-mile walk where I keep a pace of at least 15 minutes a mile. And then I also work out throughout the day. One other time, I'm doing 75 hard. Anthony Frisella, great guy, great program. But anyways, I listen, I read a lot, and I was looking into this. How do I become a top 5 loan officer? And, oh, man, I wish I could remember his name. He's a freaking stud in the industry. And I respect the hell out of his loan officer podcast.
Is it
Ben Gordon.
Anderson?
Ben Anderson. I think it's Ben Anderson.
Is that it?
Yeah.
Ben Anderson? Okay.
Bald guy.
Yeah.
Yeah.
Yep.
And he mentioned comprehensive real estate plan. He mentioned setting your clients up for life. He mentioned marrying your clients.
Yes.
So then I started doing the numbers. I'm like, okay, so what's the average age of a first-time home buyer? 32. 30 years later, can you get them investment properties?
Absolutely.
Can those investment properties be paid for?
Absolutely.
So we started running the numbers because he had mentioned it. He didn't break down the plan, but he had mentioned a plan similar or something along those lines. I had an epiphany, and I was like, instead of being transactional, I'm going to be client-based.
Yes.
Because I can help more people.
Yes. I
can be, as he said, a good friend.
Because it's not, a mortgage is 30 years, not 30 days. It's not just about the transaction.
Well, also, too, as a loan officer, a loan originator, a mortgage broker, 30-year mortgage, right? The average person moves between once every 7 to 12 years. So if you want to have a business that's producing as well, you better figure out how to provide value to people outside of just that once every 7 years. Because if it's once every 7 years and you don't provide value in between the times that they move or the times that they upgrade homes, how are you going to have a business?
Yeah.
You can't. You're transactional. So you will ebb and flow with the market. But if you come up with a plan that is almost, it's not a retirement plan, because we can't give financial advice, but we are mortgage experts, so we can give mortgage advice, and we can run the numbers for you. And we can say, hey, listen, maybe it's not the best idea to pay off your primary residence as fast as you can. Maybe if you use that money and you bought a couple of investment properties, here's what they would cash flow. And it's not as risky as everybody says. And here's what it is. And here's what the vacancy rates are. And here's what it is. What's the vacancy rate right now?
It's below 4%.
Below 4%. And if you follow us on NBI Financial Group on either LinkedIn or Facebook, you would have saw, did you see that thing I published about the housing bubble?
Yeah.
So we have, what was it, 3 million more families?
Well, I got a quick question for you.
Yo.
What housing bubble?
Yeah, there isn't one. There isn't one. There's a supply issue. There's a supply issue. And then there's an inflation issue because the price of food and the price of transport stuff has gone up. So if you look at things, we're actually in a decently strong economy right now. As weird as that sounds.
Yeah.
Decently strong. I didn't say it's super strong. Decently strong. You don't think we are?
I mean, that's a very bold statement, but it's a natural economy. It is not a bad economy by any means.
It's weird, though.
It's very weird.
Stock market's going down, but inflation's still rising.
Yes.
But this time, if you look at the numbers and you dig into them, the numbers came out today, and it was like 8.6% CPI. Those numbers, if you dig into them, food prices are up, which is causing that number to go up. This price is up, which is causing that number to go up. Housing's kind of flatlined a little bit.
Yes.
And I want people to understand this. Even if there was a bubble, and even if it was to be a 10% correction, we're still up
9%.
No, more than that.
From last year?
I'm talking about go over the last 3 years.
Oh, yeah.
We're still up like freaking 30%.
Yeah, it went up 19% last year.
In 1 year. The year before that was like, what, 11% or something crazy?
Yeah.
I don't know the exact number, but I was looking at this, and I should have wrote it down. As you can see, no notes, no computers, nothing. This is just free-flowing the podcast. But we're still up. So markets do what? They ebb and they flow. Stock market goes up and down, but historically it goes up, but it's not up in a straight line. But anyways, what I'm getting at is we have this comprehensive real estate plan, and it's something that is part of my why, and we're going to set you up for life. So if you're 32 and you're a first-time home buyer, come see us, because we'll create a comprehensive real estate plan with you, and we'll check in with you on a quarterly basis to see where your goals are going, to see what life events are going to happen. We're going to marry you. We're going to become friends by the time it's over, because I'm going to have you cash flowing, and by the time you're 62, if you're 32, I'll have you in 6+ properties paid in full. And in this area, on average, what's the median home price? $375. So let's call it $400. We'll round up just a little bit, right? You're going to have $2.4 million in paid-for assets when you go to retire. And those assets are going to be cash flowing. And, hey, don't worry if you don't want to manage them, because we are partnered with a lot of great realtors who also do what?
Property management.
And we can get you with them, and it costs anywhere from 6 to 8% for the most part. And the more properties, the less it costs you. You know what 6% on a monthly rent payment is? If it's a $1,500, between $1,500 or $1,000 and $2,000, between $70 and $100.
Yeah.
So you pay $70 and $100, between $70 and $100.
You don't have to worry about it.
The only thing you have to worry about is if something breaks, having to cover the cost.
Yes.
But they do everything else, from put somebody in the property. They do everything, dude. And we know a ton of great ones. So imagine that. Imagine you're working and you're contributing to your pension fund and your 401k, your Social Security, and you go to retire, and normally you'd be like getting maybe $12,000 a month. And these are just round numbers. These aren't exact numbers. These are examples I'm just throwing out there. But you have 6 properties, and they're worth freaking $400,000 each. That's $2.4 million in assets that you now own. If you sell those and put it into an IRA, and you go 6% a month on that IRA, you never tap the nest egg, because IRAs go up by what? On average, more than that, right?
Yes.
And we're not financial advisors. This is just what I'm doing personally. This is meant for entertainment purposes. So at 6% that you're hitting, you're not getting into the nest egg. So now at retirement, that's an extra $15,000 a month on that $2.4 million IRA. And when you pass away, you pass it down to your family.
Absolutely.
And then you could do a lot of different things. I would talk to an estate lawyer. I would talk to a financial advisor on how you want to protect that for future generations. But you just created a legacy. You just created generational income for who? Your children. That is called being a disciplined adult. Here's the other piece. Hey, I don't want to do this. I want to keep these properties, and I want them to keep cash flowing, and I want to keep these assets. You can also do that. And you know what happens with that?
What?
When you pass away, you pass them down to your family.
That's right.
So you just did what? Created a legacy. I wanted to help people create legacies for their families. I want to help get people out of places that are tough financially. And I think the fastest way to do it in this country, in this great American country, is through real estate.
Yes. I
That
agree.
Part of my why.
Yeah.
So I'm glad you brought up the comprehensive real estate plan. And it's super exciting to talk about. And I'm pumped right now. And we will come up with the plan for free. Costs nothing.
Yeah.
It's a free plan. And we'll check in for free. Every 3 months, we'll check in for free. We'll get to know who your wife and kids are. We'll get to know who your husband and kids are. Your significant other and kids are. We'll get to know your families. We'll get to know what's going on with grandma. You're going to know what's going on with my family. Because you're not a transaction to us. You're a person. And we like to do business with people.
Yes.
What else? Anything else? No other why?
I mean, I know you have a good one.
What is it? The fighting of misinformation?
Yep.
That's the podcast why. I'm sorry to huff and puff into the microphone. You like that, don't you? That I do that.
I do.
That I'm mad about this.
I do.
I have a huge problem.
It's a good reason, though.
But do you not agree with it?
Oh, I do.
Here's the reason. Misinformation. I don't like the misinformation. Ben, what specific misinformation am I talking about? Because you don't like it either.
Oh, no. Main Street news, news in general. Especially on our next video.
Legacy media.
Correct. You will see on our next video, we'll have some exact examples. But the headlines out there are just insane.
Insane. Give them an example. What am I talking about? What headlines?
Well,
we aren't talking political. We're talking.
No, housing.
We're talking only housing and real estate on this show.
Yes.
It's ridiculous what you see on like Fox Business, MSNBC Money, CNN Money.
Oh, they're
Squawk Box. Those losers.
Articles, yeah, the articles are housing crash imminent, and then you read the actual article, and everything's actually pretty stable. But what is everyday Americans doing after they get home from a long days of work in between families? They just scroll through it real quick. So they see that, and what do they think?
Oh shoot,
everything's crashing
because they're just reading headlines.
Exactly, because that's all they have time to do, which is fair. But the headlines are so misleading.
So I believe that through this show, through our social media pages, through everything, we can do something called bring accurate information to people, because I don't believe in silencing anyone, even in legacy media. I believe in beating bad information with good information.
Yes.
And it was time for me to do something. And I need to do something in an industry and in a field and in a topic that I'm an expert on, and that's mortgages and that's real estate. More so mortgages than real estate. Talk to a great real estate agent for real estate expertise. But I say mortgage and real estate because without mortgage, there is no real estate. They go hand in hand. So I wake up in the morning and I see crash this, imminent that, this, that, ba, 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 ba. The talking heads bouncing around on TV. But guess what? You want to know what's wild? We sit and we listen to these fools who are going to tell us how this, that, and the other thing is going to happen, but they're not out there grinding like me and you in the actual industry, putting in work, rolling up their sleeves, and helping people. And when they talk about the markets, they don't have any clue.
No.
And the funny part about the ones talking is they're taking topics, or they take data points, and they skew what the data point actually says a lot of the times.
And then you actually read the whole thing, and they'll have like an almost fine print at the end of, well, this isn't really the case. It's just ridiculous.
Because it's clickbait, because they are...
Exactly.
It's clickbait, and they're paid to do what?
Get clicks.
Period.
Yes.
That's their advertising model. That's the problem with the advertising model.
It's ridiculous. There was an article the other day I was reading. It was, when will the real estate bubble burst? You click on it, and the first part in there is no real estate bubble. Like, why would you even bring that up?
Because they wanted to click. It's a bait and switch. What happens when a sales guy bait and switches? You leave the sales guy. You don't do business with him. You lose your license.
We would lose our license.
So how can the news media, whether it's an article, whether it's MSNBC, whether it's CNN, Fox Business, it doesn't matter what station it is from a financial standpoint, how can a news channel do what they're doing? Because what affects the market? Speculation. And if people are reading that and they're speculating on things, how does that not affect the market? You don't think that affects people's lives?
Oh, it definitely does.
I look at the stock market, for instance, and it's crashing or going down. I shouldn't say crashing. It's going down, right? It's going down, and a lot of it's speculative.
Yes.
Some of it was bloat from all the checks that were printed and went out, but a lot of it's speculative. But how about this? How is the stock market going down, but inflation going up? What? We're in a weird time, dude.
It is very weird.
It's a weird time. And we have a shortage on housing at the same time, and we can't build houses fast enough. And part of that is because of 2008 and all these big-time builders that were building all the neighborhoods and stuff, going out of business and going into different things that can make them more money, such as custom-built homes. There's a certain price mark. If you hit a certain price point of build or a certain price point of house, it's not as competitive. But for middle class, man, good luck.
Yeah, it's insane.
But we'll help you. We'll help you. That's not a negative thing that's going on in the industry. It's just a tight market right now, meaning there's not enough inventory, but it doesn't mean you can't get something. You will get something, but you have to be patient and understanding and go after it.
Yes.
And you have to be aggressive. Now's not the time for the weak.
And have a strong pre-approval.
A bar of gold.
Yeah, that's right.
We give out bars of gold, not literally, figuratively. You have to have another why. You have to have another why. Who do we help the most?
I mean, the information thing, that's part for me too. There's a lot to it though.
What do we do the most of? When we call our realtor partners, what can we get done? What do we tell them every time we call them?
Self-employed?
Self-employed, dude.
Yeah.
That's not a why of yours?
Yeah, I mean, it is. Well, but it's all clients. Like, and that's the thing. We are so diversified and so flexible that we can help all these clients in a unique situation who are great clients, who are fully qualified to purchase a home. We can actually make that happen, especially when they're having trouble elsewhere. Self-employed is a great example of that. So we mentioned we work with right now 10 different lenders, and that's always increasing. What does that do? That gives us multiple products. We already mentioned the bank statement loans, but there's also investor cash flow loans, 1099 loans. There are things that will help look at your income a different way.
Yes.
To qualify.
Yep.
It's not saying, oh, we're going to qualify without the income. No. It's just, hey, we're going to take different situations into account and do that. And with us being able to work with different lenders, we can do that. We also, with our underwriting knowledge, have a very good grasp on
do you remember
the
one of our
documentation
first clients
that is needed.
One of our first clients, remember?
Which one? Self-employed?
No. One of the first, 55 years old.
Yes. Oh, yeah. It's ridiculous.
This pissed you off.
Because
let's talk about it. Let's talk about, because that's part of the why.
Yeah.
This is a person not self-employed.
55-year-old, first-time home buyer, by the way, and was so excited to try to buy her first home and was been turned down multiple times, finally came to us. We pulled her credit. First off, there was no other inquiries. No one had even tried to pull her credit. They just turned her away for nothing. They said for income. What was the concern with income? Well, she had a little bit of a gap in there. Why was that? She got in a car wreck and was even able to provide us with the documentation showing disability pay because of that car wreck that covered that period. Everything is so well supported that the reason she was turned down is because they were too lazy to ask a few questions. They didn't take her seriously as a client.
Yep. Not at all.
No.
They didn't take her seriously because she probably went to them over the last 2 years. Well, it was a boom. It was shooting fish in a barrel. Interest rates were as low as they ever been. They were refi.
Yes.
Right?
Right.
And so they didn't want to deal with it. Or her loan amount's not very big, especially for this area. So they did not want to deal with it. But what did we want to do? We wanted to help a person
Absolutely. And it keeps
achieve
going
the
back
American
to-
dream.
It keeps going back to the people. Like that, and that is why we do what we do. Like mentioned before, I wanted to be able to help people, not just for the transaction, but after. But I mean, it's the
100%.
transaction as well. I want to be able to. It's so frustrating being an underwriter and looking and seeing these loans come in that could have been done the right way, and just with the way they were submitted and the fact that they picked the lender they did, they were not able to get done. But they were good loans.
100%.
And just by not taking the right application or by not getting the information that you needed up front, you cost the client at least time.
And my whole thing is this, is 99% of the time, if a deal isn't going to work, you should know up front.
Absolutely.
You should know up front.
Within the first 24 to 48 hours.
And we know.
Yes.
We're that quick.
Yes.
We get pre-approvals out, like fully underwritten pre-approvals out in what? 4 hours?
Yeah.
Wild. Another part of my thing, too, is I was sitting working for the lender I was working at, and I kept seeing these deals fall through and not work. And 99% of the time, again, it should have been caught up front, and it should have been dealt with. And granted, they probably took the deal someplace else and had it work there. But that you shouldn't have to do that. And that's a bad experience for that client.
Yes.
That's a bad experience. Do your due diligence up front. So I'm like, and you're calling me to structure deals and you don't know this? You should know this. I have to help people. Plain and simple. Like, it's crazy that I'm saying this. I never thought I would get to this point in my life because I never thought like this before until I started like really getting, I guess, older. I have a talent and I have an ability to help people achieve the American dream of home ownership. That is an American dream. Our property rights in this country are a lot better than any place else in the world. 100%.
Yes.
So you have a true opportunity to be a homeowner in here. And not only that, you have a true opportunity, and it's not as hard. The American dream's not dead. It is easier now than ever to own a home.
It is.
So I'm going to show you how to do it, whether it's through down payment assistance, whether it's through a bank statement deal. Oh, you want to be an investor? Debt service cover ratio. Oh, you have 19 properties and you want to finance at 20? Okay, DSCR. I can do 20 finance properties. No one else can do that. Oh, you are an investor? You're buying an investment property and you want to close it in the business name? Gotcha. I can do that. Can you find someone else that, oh, you want an FHA loan and your credit score is 520? As long as I can get you approved eligible, I can do that too. I have a lender for it. Oh, brand new construction on 5 acres of land? Got it. Jumbo loan with a 1x30? No one else can do that. I can.
Condo tells.
Condo tells. Non-warrantable.
Yep.
I can do it all. And guess what I am? I'm an expert on it all. I'm a mortgage expert. That's my why. And as a mortgage expert, I'm here to help you, the consumer. I'm here to help you, the borrower, you, the buyer, you, my client, you, the person. That's my why. And every day when I take a new application and I see somebody who isn't helping somebody properly or not putting their all into it, I have to say a prayer. My Catholicism comes out.
Yeah.
And the prayer is not to wring that person's neck who's not helping them. And then it's to calm down and to be led properly as I should be and help the person and do the right thing by the person. Every application I have taken, I've been helping somebody who's already been someplace else.
Yes.
Wow. Oh, renovation loans. Forgot to yell about those. We got multiple lenders that can do those now. That's the new thing. That's what they're all pushing. Oh, renos. Well, shit, you're 6 months late. Literally 6 months late. You can do a renovation loan? Congratulations. We needed those 6 months ago when everybody was trying to buy, not when the interest rates were 7%, but it took you so long to get your head out the ass and to figure out what your overlays were going to be. We're getting them now when people aren't as necessarily needing them now.
Yeah.
We needed them 6 months ago, but we could still do them, and we will have some, and I've already talked to people about some. There's a lot of people in this industry I like a lot. T-Lot podcast, love them, great information. And if you're just a regular consumer, check them out because it's going to teach you a lot. Like one of the episodes I thought was,
it's not just to mortgage professionals, it's to everyone.
Yeah, but yes, exactly.
Like our show.
Yeah, it's designed for everybody.
Yeah.
Our show, we don't even know where our show's going yet. Do you know what I'm saying? Like
Yeah.
we haven't been doing it long enough. They're on like so many episodes, thousands of viewers. Good for them.
Yeah.
I've watched every episode. I went and binged all of them. Right? Because they're experts and they're knowledgeable.
Yes.
But they talk a lot to the loan officer. And if you're a loan officer, you should be listening to it because it's going to make you better. You're going to be able to get more done. As far as the loan officer is concerned, I'm not the Loan Guys podcast, us. I want to bring knowledge to the consumer more so than I want to tell loan officers how to be the best.
Yeah.
Does that make sense?
Yeah.
You'll get knowledge on it, but we're not going to spend full episodes talking about delayed financing.
Yeah.
We might give a story on how we helped a consumer because that's what makes us feel good. And the T-Lot podcast, what makes them feel good, I'm guessing, because this is what it is what the industry is like and how to be successful in the industry because it changed their life. This industry has changed my life too.
Yeah, same here.
From a financial standpoint, like if you do well in this industry, you do well. So my life has been changed. But my life has also been changed because I've been able to help people and I found a higher calling. I found my purpose because I literally can change somebody's life. So that's just a little bit of our why, what we're doing here on the podcast. You got anything else?
I think that about covers it for today. I'm excited for next episode, though.
Yeah, I'm excited too. Hopefully you're a little bit more awake next episode. I'm serious. One of the things about this industry, Ben, and you know this, what's one of the things about this industry? You need what?
Energy.
Energy. How do you get energy?
Work out.
And eat healthy.
Yes.
And get your sleep apnea taken care of. But if anyone wants to sponsor us on sleep apnea,
I can check one of those three off.
Yeah. But long story short, man, we're here to help. The best way to get in contact with us is going to definitely either be through Facebook or LinkedIn.
Yes.
We're the most active on those two. We'll probably get pretty active on Instagram and Twitter here coming up.
Probably. Although Instagram shut down my account today.
Why?
I don't know.
Do you have a profile picture?
Yeah. I got it reactivated, but it was shut. I went on to this morning and it was shut down.
Wild.
For no reason.
We're not even political.
No. I hadn't posted a thing on it yet. It was a brand new account.
That's interesting. Yeah, I mean, you'll find us every day. We put stories up. We talk about different loan products. You'll actually learn more about like loan products and different things you can do through our Facebook stories every day because we talk about a different subject every day. We'll probably start going back and hitting. Like I talked about delayed financing today and how I help one of my realtor partners with delayed financing. What was yesterday? Man, I definitely helped somebody yesterday. It was a good one too. I don't remember, dude.
Was it on the tax extension?
No, that was the delay financing.
Okay.
What was it? It was a good one. Debt consolidation. I saved that client $850.
Gotcha.
In payments per month. At lower interest rates. Had $32,000 in credit cards and $17,000 car loan, both 13% interest rate and 11% interest rate. We were able to cash out. She had a home that she had owned for like 7 or 8 years or something. I don't remember off the top of my head. One of the things, too, people, don't be afraid to tell us your personal details because they all kind of run together because we look at numbers all day. But, yeah, anyways, long story short, it kind of, and we were able to lower that monthly payment because we paid off those high interest credit cards, that high interest car loan. We were able to put I think it was 3 or 6 months into a savings, right, for a rainy day fund, and her payment is still now $850 lower. Her total payments is $850 lower per month than what it was prior.
And saves on interest.
And saves on interest. And when interest rates go back down, which they hopefully will in 18 to 24 months, like they have the last 3 times this has happened, we'll get her into a refi into a lower rate.
Yeah.
And then we also put together comprehensive real estate plan. So she has plans to buy an investment property now. That wasn't an opportunity before. But when you have $850 more in cash flow per month,
exactly,
guess what you can do? You can start saving.
Everyone gets so caught up on interest rate. Cash flow, to me, is the biggest thing.
Yeah, interest rate doesn't scare me.
No. It shouldn't. Does it impact? Absolutely.
It impacts what you can afford.
It's important. But yes,
because it adds so if you go from a 5.875 to like a 7.375, that's like about $250 extra in payment.
Yes.
So it does impact what you can afford.
It definitely does, but do not be scared of interest rate. Is in my opinion.
Ever.
Correct. More focus on your cash flow in terms of what are you actually paying, and then your amortization, which does include interest rate of where is your money going. And guess what? If you can lower your payment and pay that extra, that's going to do way more benefit than any sort of lower interest rate would do.
100%. 100%. And if you can lower your payment and then use that and buy an investment property, and
even better.
Say the investment property, you're now building equity, and most of the time you're making more on the rents than what your mortgage payment is. So now you save $300-$400 in cash flow a month.
Absolutely.
Just leave that in the bank and you then use that for your next down payment. And when the market goes up again, because it usually does, you can even do some other creative things. Now, with that being said, we don't want to get over leveraged.
No,
so we got to be careful.
Do not invest your mortgage payment away. However, just make sure you look into it and actually look into your cash flow, look into your budget, and see. And that's what we can help you with our comprehensive real estate plan.
Yes, 100%.
Like that is in general what we are looking at and where we are able to help.
100%. But I think that's good for this episode.
Yeah.
We'll get more into that. This was our why. I'm Nick. That's Ben.
I'm Ben.
Where can they find you, Ben?
Facebook and LinkedIn.
What about Instagram? You just said you had Instagram. It's reactivated. What's your name on Instagram?
I do.
Ben _
NBI Financial Group
LLC.
Is LLC on there?
Yep.
I can't remember. Okay.
It's Ben _
NBI Financial.
So
yeah,
Ben
like I said, it's
_
brand
NBI Financial Group
brand new
LLC.
account.
He's like a 58-year-old man when it comes to technology, and not in a good way. I am Nick Campo. You can find me on Facebook. You can find us at NBI Financial Group. We're on Facebook. We're on LinkedIn. We're on Twitter. We're on Instagram. We're on TikTok. We haven't done anything on TikTok yet. But you can also find my personal stuff. I do a lot of talks. I go meet at chambers of commerce. I meet with different realtor associations. I meet with different business groups. That's all going to be filmed and broadcast on my personal page. And my personal page on Instagram, it's Nick _ NBI Financial Group LLC. I'm Nick Campo on Facebook. Go ahead and add me. And on LinkedIn, Nick Campo or Nicholas Campo, but you'll find me on all of them. But you can find me through NBI Financial Group LLC on all the social media sites. That is it for us. I am out. Peace.